I'm worried that a lot of people overinvest in the altcoins and underinvest in Bitcoin because you've got one thing, which is digital property or digital energy worth $500 trillion. That's the most important invention of the century. In the spectrum, you've got the savers. The savers are going to convert a weak asset to a strong asset. That's like taking pesos and converting it to dollars and taking dollars and converting it to Bitcoin. That's a saver. The investor strategy is I take portfolios of risk. I'm going to bet on Apple versus Google versus JP Morgan versus Ethereum versus Solana, as technologies and which technology wins. The traders are trading portfolios of risk derivatives and yield curves, and they think that this will move in line with that. And the speculators, they're in it for Shiba Bow Wow, right? And this is up and that's down, right? And the meme coins, and it's all good fun and it's entertaining. I would say the crypto world is, it's got all of those classes of players in it jumbled together. And probably the most important thing for an investor is figure out, are you an institutional investor? Are you a saver? Are you a tech VC? Are you a gambler? Are you a trader? If you're a trader and you're fixated upon trading SHIB versus Doge versus Solana versus Cardano, maybe there's something there. But, I'm not going to stand up in front of a billion people and tell them that the solution to their monetary problems is mastering trading or mastering speculation. And in fact, Brett, the fundamental theme here is I don't even think it's wise to be betting on Apple versus Amazon versus Facebook versus Google versus Microsoft. The whole point of this is there's massive amounts of investment risk. Buying Exxon or British Petroleum, you could buy $100 billion blue chip, 50-year-old, 100-year-old company. It's still got massive risk because of regulatory intervention and tariff and trade and execution. So the point of Bitcoin is to go to the far left end of the risk curve. I don't want to take any of that risk. And the point of a lot of the cryptos is to go to the far right end of the risk curve, where you're taking so much risk, you don't even realize the risk you're taking, right? I think the regulators have strongly implied, Brett, that just about every single thing trading in the space is a security other than Bitcoin. Yep. Gensler was asked point blank in congressional testimony, is ETH and Bitcoin property? And he looked at the questioner, he refused to answer. He said, I'm not going to speculate on an individual token, but if your token, if a token had an ICO related to it, and there's a group of people, then it looks like an investment contract or an investment company, he strongly implied that ETH is a security along with everything else. And so I just don't think in good conscience, any responsible institutional investor can hold anything in the crypto ecosystem other than Bitcoin. It's the only truly decentralized commodity. Everything else is a risk. You take it at your own peril, and what'll happen? I don't know what'll happen. You can make money, right? You can make money, but as a CEO of a publicly traded company, I just can't see myself holding a security token or trading or investing on a platform that relies upon non-KYC, AML, derivatives trading with leverage without a license. In the US jurisdiction, why would you want to do that? I'm worried that a lot of people overinvest in the altcoins and underinvest in Bitcoin because you've got one thing, which is digital property or digital energy worth $500 trillion. That's the most important invention of the century. And then you got 10,000 crypto assets that are just speculative instruments, of which 99% are going to fail. So I think it'd be sad to see so many people in the crypto world staring at the greatest invention that we've got for the century and miss it all while they chase after the 13th dog coin or the 16th smart contract platform. And I think that most of the mainstream media and most of the politicians, they're kind of confused by the sound and the fury, because people can join all the crypto noise with Bitcoin, which is truly a revolutionary decentralized digital property. And it's unfortunate because it causes people to make cognitive mistakes and investment mistakes, and I think they'll regret them in time. Bitcoin's a revolution in favor of the mere mortal. Why should a normal person have to risk their life savings speculating on regulatory intervention and competition and technology? Why can't they just keep their money, right? And so you can speculate in the stock market, you can speculate in the crypto market. And if you're a professional speculator or a professional VC, you've raised someone else's money and you're paid to do it, more power to you. But it's unfair to actually ask the average person to speculate, to gamble their life savings just to avoid not getting poor because of monetary policy at the level of the central bank. And Bitcoin's the solution to that. That the other solution, the conventional solution, is just buy the S&P index. But the S&P index is a defective solution because it's a security. Corporations can't put securities on their treasury balance sheet. You're capped out at 40% per the SEC 40 Act. So literally, you're by law prevented from that solution if you're a big corporation. And if you're unbanked or outside the US, you don't have the right brokerage. You don't have that choice either. So Bitcoin is a fundamentally different thing. The rest is just an extension of like Robinhood trading one way or the other.
Right.
I mean, I think that the catalyst to watch are any developments on the accounting front. That'd be positive. Regulatory clarity when it comes from the FDIC. I think we can expect regulatory clarity on security tokens. Eventually it'll come from the SEC, from the CFTC. I think the stablecoin regulatory clarity, I think all of those things will have an implication. So watching regulatory developments, and then the approval of ETFs. I think just a basic plain vanilla spot ETF would be a very bullish development. And then, of course, obviously large buyers, at some point, you would expect that these macro funds with the billions of dollars of gold will finally throw in the towel, and give up on gold. And if you start to see serious rotations from gold into Bitcoin, ironically, Brett, when I started buying, it was $9,500 a coin, and now we're like 63,000 or whatever a coin. I bought more than $1 billion. I bought $3.3 billion worth of Bitcoin. Tesla bought half of that, right? If you make a list of public entities that announce they bought more than $1 billion and they're not ashamed of it, it's still not as many as you would expect. We got up by 600% on the backs of like 3 or 4 big announcements,
right?
And then a bunch of mid-size announcements, right? And so what happens? We're still waiting for these entities to take $1 billion position. And by my count, there's 10,000 billionaires, there's 10,000 corporations, and there's 10,000 investment companies that all, have collectively billions of, have more than billions, have $10 billion of assets. So there's 30,000 pretty powerful entities out there. And of the 30,000 entities that could say we bought $1 billion, you've got like 3.
Right.
So what happens when you get 10? I think that those shoes, when they drop, will probably catapult us forward. And I think it's just only a matter of time, right? I mean, it can't be that much longer before we start to see somebody making some larger announcements.